Hey guys, welcome back to this channel. So in today's video, I'm going to reveal the best moving average trading strategies for 2025 and 2026. Strategies that work in every market for stocks, forex, crypto, options, commodities, and guess what? You can use these strategies whether you're trading from Nigeria or anywhere in the world. Now, everybody knows the moving average. It is widely used among traders, but very few traders actually know how to use it properly. Most beginners look at charts filled with candlesticks and they can't tell whether the trend is actually going up, down, or sideways. That's where the moving average gives you an unfair advantage. So I'll show you real chart examples, setups for entry, confirmation signals, risk management, and the exact moving average strategies pro traders still use in 2025 to time their entries, avoid fakeouts, and manage risk. But here is a quick warning. If you think moving averages don't work, it's probably because you're using them the wrong way, exactly how I used to when I started. So stay with me till the end because I'm breaking these strategies down with real TradingView visuals, not outdated textbook theory. So before we get right into it, just go ahead and hit that subscribe button for me real quick. Yes, that one. Perfect. Thank you so much. And don't forget to like this video so it can get to more traders and they can also learn. So let's dive in. A moving average is simply a line that shows you the average closing price over a period of time. And why does this matter? Because it smooths out noise and reveals the real trend direction. There are different types of moving averages you need to know. You have the simple moving average, which is slow, steady, and perfect for big trends. You have the exponential moving average, which is fast, reactive, and ideal for modern day volatility. And you have the weighted moving average, which are used for advanced scalping setups. And the new trend in 2025 is traders focusing more on adaptive moving averages that adjust to volatility. But here's the key. Not all moving averages are equal. To identify long-term trends, use the 100 or 200 EMA. For medium-term trends, use the 50 EMA. And for short-term setups, use the 9 EMA or the 20 EMA. If price is above the 200 EMA, it signals that the market is in a long-term uptrend and you can take a long position. And if the price is below the 200 EMA, it indicates the market is in a downtrend and you can take a short position. And if price is below the 200 EMA but above the 20 EMA, it signals a short-term correction in a downtrend. So it's telling us that the long-term trend is down, but the short-term trend is up. Adding it to TradingView is simple, and you can also add it on any other platform you use. On TradingView, click on the indicator tab here, and then type in moving average in the search box. You'll see all the different types of moving averages, so select any one you want to use. For this session, I will select the exponential moving average. Once you have selected, you'll see the moving average line appear on the chart. Next, you go to the settings to change the length of the period and change the color of the lines. So for the first line, click on settings here and change the length to 50 and the color to yellow or any preferred color. Then go to the second moving average and click on settings again. Change the length to 200 and the color to blue. Now you can clearly see and easily differentiate the two lines. Now let's apply the knowledge with real trade setups, because these strategies you're about to learn can literally change how you trade. And trust me, strategy number 3 is where most beginners finally see the light. The first strategy is the golden cross and death cross. This classic still works in 2025 when you use it properly. For this strategy, you're using the 50 EMA, which is the yellow line, and the 200 EMA, which is the blue line. When the 50 EMA crosses above the 200 EMA, that's a golden cross. It's a bullish signal that indicates long-term uptrend. And when the 50 EMA crosses below the 200 EMA, that's the death cross, a bearish signal that indicates a possible downtrend. But here's the mistake 99% make. They enter immediately after the crossover. Don't. Instead, check the last two crossover signals. If both were successful, it means that this chart responds well to crossovers. If both crossovers fail, then avoid trading this strategy on that asset and time frame. Let's look at this example. In this chart, the last two crossovers that formed here and here were successful crossovers, as we can see how price moved up significantly. And here is another example. The last two crossovers were also successful, but in this case, it's a downward crossover, meaning you would enter a short trade. And see how price went down significantly. So currently, the last two crossovers have been successful, which tells us that crossover signals are reliable in this specific chart and time frame. So you can look for entries after the next crossover. The real entry comes when price pulls back to the 50 EMA and gives a confirmation candle, like this bullish engulfing candle or this pin bar. This filters out fakeouts and late entries, because the next strategy, it's what day traders use to catch fast moves before anyone else notices. The second moving average strategy is the 9 period and 21 period EMAs. This is the momentum trader's weapon. It's a scalper's favorite. It's perfect for day trading forex, crypto, and volatile stocks. And here's how it works. The 9 EMA is lightning fast. It moves extremely fast and helps identify short-term momentum, while the 21 EMA provides the smoother view by filtering out the short-term noise and confirms the strength of momentum. It is mostly used on the 15-minute time frame. So when the 9 EMA crosses above the 21 EMA, it suggests the momentum is strong and you will see a shift to the upside. So you look for an entry when price pulls back to the 9 EMA. That's your ideal entry. And you can see this nice pin bar candle signaling a reversal from the pullback. That's your confirmation signal. Then you can set a stop loss below the previous swing and a target of 1 to 2 or 3 risk to reward ratio. And similarly, when the 9 EMA crosses below the 200 EMA, it signals an incoming weakness in the market. And so you can exit your trades at the pullback or take a short position to ride the move down. And avoid entering trades when the candles are far above the 9 EMA. This setup helps you avoid chasing price, catch intraday trends early, and ride the wave without fear. So use it in a trending market, not choppy or sideways market. But if you like smart money style trading, then strategy number 3 is your gold mine. The third moving average strategy is using the 200 EMA as dynamic support or resistance. The 200 EMA is respected by hedge funds, institutions, and algorithm models. It acts as dynamic support or dynamic resistance. So for this strategy, watch out for a bounce or breakout at the 200 EMA. If price dips and stops above the 200 EMA, that's when you want to buy. And if price falls below the 200 EMA and stays below it, you look to sell your position or take a short trade. So let's look at this example on ASDS daily chart. So you see price bounced off the 200 EMA multiple times, here, here, and here, and all staying above the 200 EMA before exploding upwards. This shows the 200 EMA is acting as support in this uptrend market. And here is another example. But in this chart, the 200 EMA is acting as resistance. So you see price bouncing off the 200 EMA multiple times and staying below it after this breakout below it. This is when you want to exit trade or short a trade. And see how price pushes further downwards, creating this lower highs and lower lows, signaling a trend reversal to the downside. And this works beautifully on the 1 hour, 4 hours or daily time frames. But here's the power move. Combine the 200 EMA with RSI, stochastic or volume indicators. When price touches the 200 EMA and RSI or stochastic is oversold, that's a powerful buy signal because price tends to reverse back upwards at that level. Similarly, when RSI or stochastics is overbought and price is at resistance, that's a powerful sell signal because price reverses back downwards. And with this, you instantly increase your win rate. But if you love explosive moves, strategy number 4 is for you. The fourth strategy is the moving average squeeze. This moving average strategy involves using multiple EMAs, a fast one and a slow one. You can use a set of 3 like the 5, 8 and 13 EMAs, or a set of 2 like the 20 and 50 EMAs. This setup forms when the EMA compresses and tightens together like they are hugging. This means that volatility is dying and a massive breakout is coming. So when the squeeze happens, don't enter yet. Wait for the breakout candle with high volume and a retest of the EMA cluster like you see here on this chart. This will prevent you from falling into traps and avoiding false breakouts. And you sell when the price breaks below and the 20 EMA crosses below the 50 EMA. In 2025, AI-driven stocks created massive volatility squeezes, and this strategy caught some of the cleanest breakouts. But now, let's talk about how professionals avoid fakeouts. And the fifth strategy is the multi-time frame moving average confluence. This is where beginner traders become smart traders. The way this strategy works is you align your trade signals across different higher and lower time frames. That's how you get a confluence and a high probability trade. When your daily 1 hour and 15 minutes EMAs point in the same direction, and boom, that's your confirmation. An example is in this UVXY chart. We start with the 4-hour time frame using the 50 and 200 EMAs to confirm the trend direction. And here you can see that both the 50 and 200 EMAs point upwards and price is currently above the EMAs. This confirms an upward trend and a strong bullish direction of the market. So now you're clear on the market's direction. And next thing is to look for trading opportunities by zooming in to find a potential entry zone where price might retrace or bounce on the medium time frame. So you switch to the 1 hour time frame and look for a confluence of the trend with a pullback. And no, you're not taking a trade yet. You wait for price to move down to the moving averages. And here you can see price breaking below the 50 EMA. Next thing, you want to confirm whether the break is real or a false break. So you wait for this confirmation candle that signals a trend continuation or reversal. And so you move to the lower time frame for your execution and a sniper entry. So you switch to the 15 minutes time frame to look out for the signal candle to confirm your entry. So price is currently below the EMAs. So you will wait for price to break above this 250 EMAs and look for your confirmation signal candle, a pin bar or a bullish engulfing candle at the retest of the 50 EMA. So this is what smart traders do. And the great thing about this multi-time frame analysis is that it prevents false breakouts. So now you have confirmation of the trend on the higher time frame, the pullback on the medium time frame, and the sniper entry on the lower time frame. This setup filters noise and avoids fake signals. If you are trading from Nigeria, you can use dollar-based accounts like Trove or Bamboo for stocks, XNS for forex. This way, your profits grow in US dollars while trading local or global markets. So whether you're a stock trader in the US, a forex trader here in Nigeria, or a crypto trader anywhere in the world, this moving average strategy still work in 2025 and 2026 if you wait for confluence and stay consistent. Also, remember that moving averages lag, so you need to combine them with leading indicators to stay ahead of sudden market changes. They are powerful, but they are not magic, so use them with discipline. So I've just shown you 5 best moving average strategies that can elevate your trading. All I ask is that you take 2 seconds of your time to tap the like button, hit subscribe, and also drop a comment telling me which moving average strategy will you test this week. And if you have a trading partner or relative or buddy, share this video with them. You might save them from another losing trade. So thanks for watching, and I'll see you in the next one.